Hi everyone, this is Mayank and welcome back to my channel. So today we'll discuss about this news that created havoc in the market. The market shrank by more than 1300 points right now in Sensex. My idea was to create a different video today. I was about to create a video on a particular stock which is a very good potential in long term and medium term. There's a very good opportunity in the stock, but unfortunately I'll postpone that video. Today that happened that requires more attention to discuss, and that's the reason I'm creating this video today at an urgent basis. Now what's the news? The news is that RBI had an unscheduled meeting and they increased the repo rate by 40 basis points and increased the CRR by 50 basis points. So we'll discuss the news, we'll discuss what sector will be impacted, we'll discuss what should we do, and we'll discuss why it was important for RBI to increase the lending rate as well as increase the CRR. So let's discuss what basically these things are. So repo rate is the rate at which RBI lends short-term money to banks. CRR is the rate at which, or CRR is the ratio at what the banks has to maintain a deposit kind of security with the central bank. So this increase in the lending rate has increased it to 4.4%, and the increase of 50 basis points in the CRR has made it to 4.5%. That means now the bank, so as a bank, suppose PNB is a bank, so bank has to keep 4.5% total deposit what they have with the RBI. Similarly, the percentage at what RBI lends to bank, that is around short-term loan, that they will do at 4.4%. So this increase has a major impact in a lot of things overall. So what this increase of 40 basis points in the repo rate and what is the increase of 50 basis points in CRR means. So whenever the government increases the repo rate, that means the cost of borrowing by the banks from the central bank increases, and the bank has to keep more deposit with the central government, which means CRR. So that is 4.5%. So suppose a bank has a total all capacity of $100 or 100 rupees, they have to keep 4.5 rupees within the central government as a security deposit. So that's how central government plans to protect the users, customers' money. So this is a law by the RBI. Now let's discuss why the increase was important. Today, May 4th, there is a meeting by Federal Reserve in US where they increase the interest rate. The discussion is that they might increase by 50 basis points, even more than what India has increased. So that is a very drastic increase compared to what happens in US market, because there the rate of interest are very less compared to India. The loan rate of in India is around 10-12%, 8%, 9% housing loan. That is around 2 or 3, around 3.5% US. That is very less. So 50 basis points, that means 5.5% increase in US is a huge increase, and they are going to increase it further also. This is what Federal Reserve told. Now from that context, and that has been done for inflation, to protect inflation. From that context, there is inflation in India also. You can see the price of fuel is increasing every day. The price of groceries, the price of edible oils is increasing every other day. The vegetables, the fruits in the market has increased the price. So everything is related. And to tame this particular thing, government has to increase the RR lending repo rate and the CRR. This has to increase. Now how this will protect inflation? So we'll understand that also. So what happens when the RR or lending repo rate increases? So the rate at what banks borrow, if that increase, they will increase the rate at which they will lend ahead also. If I borrow at 5% interest from someone, if I have to make profit on that, the spread what we say, they have to lend it at 7%, 8% to make 2 or 3% profit on that. So the housing loan interest which was 6.57%, that will go high. The personal loan interest which was around 10%, 11%, that will go high, 1% or 1.5%, something like that. The auto loan which was around 6%, even 5% also some banks were giving, that is also increased. So all these big purchase loans will become shorter in number. That means people have to shell out more money to purchase these loans or to go for this kind of loans. So that means the spending power of people will reduce, which was increased because of easy money. So liquidity from the market will be sucked out, and this is how the government's plan to reduce inflation. I'll explain how inflation happens in a brief. Suppose there is a bag which costs 100 rupees and there is only one bag in the market. So there are people which have a lot of 100, 110, 200, 300, 500 rupees. So a lot of people has that kind of money. So this bag demand will be high. So that means there is some people who can pay 120 for it. There is someone who will pay 150 for it. There is someone who can pay 200 for it. That means the demand of that product has increased and money is easily available. So that increases the price of the product. So that is inflation. To reduce that, what I have to do, I have to increase the price of the product, which already happened, that's called inflation. Or other option is that I take money out of people's pocket. So government takes money out of people's pocket by increasing the rate of interest so that people can't borrow and buy things. So big purchases are normally not done in cash. They are borrowed from banks and taken on loan and then purchased. For example, housing, car, and any kind of commercial property. These kind of things are done mostly on loans. So now due to increase by the RBI, all these banks, lending banks, will also increase their loan rates, and this will again reduce the kind of purchase what people make, this kind of big purchases. So this is how government actually planning to reduce the inflation, by making people purchase less or reducing the demand for that particular product. So this is entire reason of creating this particular havoc in the market or increasing the lending rates overall. So now we'll discuss what are the sectors that are going to be get impacted majorly by this particular increase. As I told you, this particular increase in the rates will reduce the big purchase. So that means it doesn't hamper your purchase of edible oil or purchase of your some eggs or purchase of bread, because those are not done by taking loans. So sectors which are growing because of this loans will be majorly impacted. That means sectors which are therefore big purchase. So the major sector is the real estate sector. Very rarely you will listen someone that they bought the entire house by paying the entire money in cash. Even they go for loan because of various tax reasons and all those reasons. Black money, white money concept comes into that. Because of that, people goes for buying these things on loan. So the moment interest rate goes high, less and less people will buy houses. So that will dampen the real estate market. Real estate market was on boom. I created already a video on Sobha and Macrotech developers also, why there was a record sales in the first quarter or fourth quarter of this particular financial year, like Jan, Feb, March. The record sales because the home loan rate of interest was very low and people bought like anything. So now this thing will go down because the rate is slowly going to increase, and I'm sure they're going to increase it further in the future also. RBI will not stop here. They have to keep on increasing every 3-4 months, or at least every 6 months. That is bound to happen. So if you are thinking this is something which happens only once, this is not going to stop. This is definitely going to happen in the future also. It's just a precautionary note, which is from my analysis. Again, I'm saying I might be wrong here, but this is something which I think this is going to happen. So real estate is a sector which is going to get severely impacted, because of which I have not seen which stock of mine has dipped a lot. I have Sobha in my portfolio. I suggested also. I'm still bullish on that, but this particular event has closed the momentum of this particular stock. So I might come across wrong now, that if I'll say this stock will rally in 2 months or 3 months, what I told in the previous video. So that might be wrong right now. So if you are planning to invest in this stock, please give it second thought. The stock is good, there's no doubt about it. They have made record sales, but this particular increase at this point in time might not give a good return. So Sobha, Macrotech developers, DLF, this kind of companies will be impacted. So what is the other sector that can get impacted? Again, same question, big purchase. What are the other big purchase? Cars. So people have bought a lot of cars. The stocks rallied, Mahindra, Tata Motors, they all rallied overall. People bought a lot of cars. The reason was COVID, people want personal vehicle. But along with that, one of the reason was that rate of interest in the car loans reduced to like very low level. So now they're going to increase. So this big purchase is also reduced. So that will get impact on the sales of this auto stocks also. So less purchase of cars will happen. So this, you can see the result of it. You can see the output of it in the further quarterly results. For example, April, May, June results will see minimum impact of it. July, August, September will see major impact of this increase of rate of interest in this particular sectors, real estate and auto sector. So auto sector is the second sector which will get majorly impacted. The third sector which is get impacted is infra sector. So we know infra sector runs on debt. Suppose one company has to create a road of even 1 kilometer, that costs crores. Nobody has that money to finance that. Even they will take loans. This entire infra sector runs on loans. So road construction, railway construction, bridge construction, every other construction runs on loans. Because this increase in rates and all, this particular sectors will also get impacted. Some stocks are fundamentally strong. They have a lot of cash equivalent. There's a lot of free cash flow. They might survive or they might stretch their survivability longer. But the stocks which are only based on debts, they will suffer more. One of the prime examples is Dilip Bilcon. The stock in my portfolio still it's not doing great. I have suggested also a couple of times the stock is good. But right now, because of this particular increase in lending rate, this stock will suffer more and it might take a longer time for it to start giving positive return. This might also happen. Why I'm naming these stocks? Because I only recommended these stocks and I still have this in my portfolio also. I'm not saying I recommended, I didn't buy. I bought these also, and I'm personally saying since it's red, I'm not going to sell it. The stocks are good, but it will take a longer time for me to get this return on these stocks. If you have these stocks in your portfolio, I suggest you not to sell, but understand that it will take good amount of time for you to get a return on these stocks. So then Dilip Bilcon, this kind of stocks. This is the third sector. So three sectors: real estate, infra, and third sector is auto stocks, which will majorly get impacted. The other sectors also which will get impacted, but these three sectors are for retail investors are majorly purchased on loans. So what about the stocks from other sectors? So other sector stocks might not be dependent on loans, but some of them are dependent on capex. So we're seeing a lot of news from a lot of companies. They're going to increase their capex, they're going to increase their factories and expand their factories. Now that will happen. I'm not saying that will not happen, that will happen, but maybe the growth of it, the speed of it will reduce, it will become slow. So this increase in rate will impact the capex also. So they'll not be as fast as they told. They will do it. Some good companies, good fundamentally strong companies will do it. But maybe instead of 3 months, they might take 4 months. Maybe over 3 years, they might take 4 years. So some stocks which you bought or I bought only based on this capex plan, good stocks, no doubt, but just that your time frame will increase. So this entire news will further increase the repo rate, will increase the time frame. Now this video is not only for this particular increase. Understand what happens when a bank or when a government increases this repo rate and CRR. So it's the impact on the entire stock market. So this video is to make you understand what is the impact of it, what happens when these things or this kind of news happens in the market. This is not a fake news. This is a real incident what happened, and this was required to happen. So in one way we should be happy, because some stocks which are overvalued become now undervalued or either become fairly valued. So it gives an opportunity also to buy those stocks. So now the question comes, what we should do. First thing, wait. Don't do panic selling because the stock market crash. I'm saying because tomorrow, maybe or day after tomorrow also, the stock market might also crash, because in the evening Fed news will come, they increase the interest rate, that will impact the market. So tomorrow also it might crash, day after tomorrow also it might crash, next week also it might crash the entire month also. So my suggestion will be, first wait, don't do panic selling. If you have good stock, fundamentally strong stocks in your portfolio, either you can wait, don't buy anything, or you can buy on dips if you have money with you. But don't time the market. Don't wait that, okay, we'll wait for May, as someone told to wait from the May, or wait till June, or wait till July. Don't wait. Don't time the market. Whenever you have money, if the stock what you're holding is fundamentally strong, do buy on dips or wait. Just wait. Don't do anything. Don't sell. Don't buy. Just wait. First strategy. Second strategy, if you have some stocks with the momentum based stocks, and if they are into good profit, sell them now, because they will go further down. One example I'm telling from my personal opinion is Jyoti Racings. I recommended this stock in the channel around 700 something. I only purchased the stock. I sold it not today, few days back, because I was expecting this particular things to happen. Not today, but definitely down the line. The stock is around peak of 2400. I didn't sell, but slowly and gradually the market corrected by 6%. US market corrected by 13%. In the last video of recession, I told you. Based on that analysis, I sold. I booked the profit in Jyoti Racings. I'm not going to buy this stock now. It's extremely fundamentally strong stock, but not now, because the small cap stocks gets beaten up even more than the large cap stocks. So I have already sold that stock. Like that, I have few other stock also which I sold few days back. I'm telling upfront. Inox I sold few days back. Lemon Tree Hotels I sold few days back. So I booked profit in all these stocks because of this particular news which I'm expecting, not today definitely, but after some time. So you also can sell the stocks which are not fundamentally strong, but you have booked profit in that. Like you have good profit in that, book the profit and sell those stocks. So this is the second thing. What the third thing you can do? Third thing is that if you know some good fundamentally strong stocks and they will go through correction in the entire this 1 or 2 month or 1.5 month time frame. I'm saying 1.5 month time frame. This is again, don't take it that this will happen. Understand the market. Market might give a dead cat bounce also. So maybe some good news will happen and people will start investing more and suddenly markets start moving up, which is unlikely to happen. Mostly it will not. But again, don't time the market. If you have a good fundamentally strong stock which you are planning to buy, if you done analysis on that, please do purchase in every dips. This is the opportunity for that. Take the advantage of the opportunity. One of the good stocks I recommended in the previous video, you can watch, go back and watch, Root Mobile. It's a very, very good stock. I bought it a few days back. It increased, when I created the video, I bought it, increased by around 6% now. Today it started going down. I'll purchase more going down the line whenever it decreases in value. It's a very, very good stock. There are many more stock like that. I'll create a video on also going down the line, few of the very good stocks which I'll also buy along with you. It's not like I'm telling I'll not buy. I'll purchase myself also. So focus on these fundamentally strong stocks which will bounce very good whenever the market starts stabilizing, whenever market starts going green. So this was the video. This was my understanding of entire thing, and this is what I wanted to communicate with you. If you think this is helpful, if you think this will help you to plan the future stock market investing for you, do like the video, do share with your friends and family, and do subscribe the channel if you're new to the channel. Thank you so much for watching. Stay happy, stay safe.